It has been a very long time since I have put out an updated guide on how to get started day trading futures. And so this is exactly what it's going to be, a 3-step playbook. So maybe if you're used to trading something like stocks or options and you are interested in dabbling in futures, or maybe you're new to trading altogether and you're trying to figure out what you want to trade, this video is meant for you. So it's going to be a 3-step to the point. If I had to start over day one, which I actually haven't been trading futures for that long. I migrated from options trading into mainly day trading futures within the past 2 years. Now, I've been trading for over 8 years, and most of that was stocks and options. And I fell in love with futures, and I will weigh some of the pros and cons. I'll tell you guys why I really like them for day trading, and we'll go over everything from the basics on step 1, step 2. We'll cover self-funded versus prop firms, which route you might want to go, and then stick around for the end of the video. In step 3, we will cover a little bit about risk management strategy and what brokers I personally use to trade futures, because I will trade on a certain broker for futures versus my other options and stock trading is on a different platform. So I think it's very important to choose the right platform for futures trading. It'll make a big difference. So let's dive right in. But before we do, I just want to remind you guys, we do a free investor newsletter and we send it out weekly. So if you guys want up-to-date information on things that are moving the stock market, big events, with the entire tariff, Israel and Iran news, we make sure we cover the need to know events and we eliminate all the fluff. We also do market analysis. We share anytime we drop free workshops. Everything will be in that newsletter. So if you guys are interested in signing up, that is completely for free and it is linked down in the description box below. So with that being said, let's dive right into step number 1, and that is going to be, you got to learn the basics, right, and how they work. Many times I see traders jump in and they're very unfamiliar with something like tick sizes. Futures trade way different and they are very leveraged and they require margin versus if you're used to trading something like a stock. Options also work very differently. There are no Greeks, and so that's a pro, which we'll cover a little bit later. But one thing you do really need to understand right off the bat is they move different. There is much more leverage involved, meaning you could have a way smaller move and you can either make or lose a very large amount of money if you're not careful. So they can be very risky, which is why I'm making this tutorial to make sure you guys are fully aware on how they work. So we will circle back around to tick sizes because that is going to take a little bit more explanation. First, I just want to cover some of the basics on what futures you can trade. There are futures on, or future contracts on things like ES, aka SPY, if you're used to tracking that via you trade options. Everybody should be pretty familiar with SPY. So the futures version of that would be ES. Oil. Everybody knows what oil is, right? If you want to trade oil, which is a commodity, you can trade CL. And so another neat thing though about futures contracts is you can trade pre-market, after hours. And so when we've been having these crazy news drops on Iran and Israel tension and potential war, oil was making some really crazy moves and you could have caught that before market even opened or overnight. So there is more flexibility with trading hours. And another thing we're going to talk about is you should be starting with trading something like micro futures. And micros are just going to be a smaller fraction of a regular contract, which is minis. And you can see I put that again at the bottom here just because I want to make sure you guys fully understand. I don't care how experienced you are with trading, please start with micros. Again, you do not need a ton of contracts to make a good move with futures or to make good money. So start with micros, get your feet wet, and then you can work your way up to full-size contracts, which are minis. And again, if I'm losing you guys, just be patient. We will cover things multiple times. And really quick, just to highlight a very basic definition, what future contracts actually are is they are a derivative financial contract that obligates parties to buy or sell an asset at a predetermined future date and price. This can really, really worry some people because they see the word obligate. But the cool thing about futures is you are constantly rolling over contracts. There are different contracts that expire at different dates, and once the volume starts to leave that contract that's about to expire, you will then roll over to the next contract. So the goal is you're never trading a contract that's about to expire because you don't want oil at your door. So you really don't have to worry about that. Most brokers, if not all brokers, are going to notify you when you need to roll over to the next contract date, and therefore you're never going to have to actually be obligated to own any of these things physically, like own a barrel of oil or anything like that. That's something that new traders do get hung up on though. So the first thing we're gonna look at is SPY versus ES, because this is the easiest way for me to help traders understand that going into futures, especially if you're familiar with something like SPY, which if you're an options trader or even a stock trader, you probably should be familiar with SPY. If not, please do your research. But SPY, if you are used to tracking that and trading that, then the futures version of that would be /ES. And so ES will just be what you would trade futures-wise if you wanted to trade the indices via SPY. Now there's one for all of them. For example, if you're used to tracking the Qs, QQQ here, then the futures version of that would be /NQ. So you can see right here. So there are futures versions of all indices. And then again, you can trade commodities like oil, you can trade gold, you can trade all sorts of things. But I wouldn't get too crazy on what you're trading other than the major ones that have lots of volume. Now I'm gonna try to quickly explain what a tick is, because that's how futures move, is in ticks. But the best way you're going to learn this is a little trick I'm going to show you. So just the basic definition is all future contracts have a minimum price fluctuation known as a tick. So they move in tick sizes, okay? Tick sizes are set by the exchange and vary by contract instrument. So that means gold and SPY or ES, for futures example, will not have the same tick size fluctuation. So you can see right here that the E-mini, ES, tick size fluctuation is $12.50. But when you look down here at the crude oil one, you can see that therefore the value of one tick move is $10. Now I'm not going to go too in the weeds because again, I think the little tip I'm going to show you guys will be way easier for you to just start to understand it. But if you want to, there are plenty of graphs online that you can see comparison on different tick size and how they move. Now, obviously this is also where paper trading is going to come into play. You can see for yourself in real time how each moves based on their tick value and their tick size. Go to Insider Week's futures calculator. I will tag this in the description box down below so you guys can pull it up with me if you want to pause the video and go grab it. But this right here is one of my favorite ways to teach new traders how futures work, because it's really easy to have your chart up and just quickly say, okay, let's say that we are going to go trade something like oil, and we'll compare really quick. We'll compare oil to NQ, all right? So let's say that you wanted to just assume you were short right now, oil. So you're going to look at oil chart and you're like, okay, what would I have made if, and again, this is my favorite way to learn, and this is how I personally learned, it's just repetition like this. So you're looking at oil right now and you're seeing, you know, maybe you're completely new and you're thinking, well, it's only moved from $65.70 per share, because you're thinking in terms of stocks, to $65.50 per share. So you're like, that just doesn't seem like that would make me that much money. So now let's pull up the futures calculator. You're going to go to futures market, you're going to type in oil, and then you're going to see crude oil right here. You're going to click that, and then you're going to hit short because you're hypothetically going short. And then remember, we said just say that you got an average at like 65.67 and you're looking to 65.52. So 65.57, okay, to, let's say you took profits at 65.52. Okay, so a short little scalp down. And your stop loss, oops, I meant to say 65.67. Let's just say your stop loss was like 65.70. All right, let's change that to 67 and let's do 65.70 stop loss. And let's say you're only trading one contract. Now I'm also going to show you an example, micros versus minis here, and hope this really helps dial it home for you. But we're just going to do one contract because this is regular size contracts. These are not the micros that we talked about. So if we calculate that and you had one contract and the price dropped and you were in 65.67 short, price drops to 65.52 and you had a stop loss at 65.70, you would have made $150 off that tiny little move off of one contract. Your risk would have been $30, and that was a really solid 1-to-5 risk-reward ratio. Now, if you were trading micros, you would go up here and type in, if I can spell it right, micro oil. Actually, just put an M in front of it. MCL, that's what you want for the micros. So MCL is the micro version of oil, a fraction of that contract. So same thing. Let's say that you were going short 65.67 and then 65.52 take profit, and then you had a stop loss at 65.70. Same exact thing, but only one contract of micros. Calculate that. You're only making $15 versus $150. Why? Because now you're trading micros. This is the easiest way for a beginner to learn how tick sizes work. You can see ticks, it moved was 3, and you can go look up the ticks on that, and then you can see like, okay, well, it moved 3 ticks, and per tick value on oil is XYZ. I'm not going to go through all that right now. But again, just play around with the calculator. It's the easiest way for you to start to learn how futures work before you ever even go bother to paper trade them. So this can really just help, you see like, is this worth it? And honestly, yeah, futures are definitely worth it because they're so leveraged. So you can have way more potential with futures, but there also is way more risk, which is why you absolutely need to understand how they move. Okay, really quickly, let's go look at an NQ example. So let's say you went long on NQ. Let's just say you were at 22,677, and then we went up to, okay, this is a lot of numbers. We're gonna have to go back and forth. First off, let's start at 22,672. So we're gonna go down, we're gonna type in NQ. You see how it says E-mini versus the micro? We're gonna do the regular size contract. And we're gonna go long this time, and we'll do 22, I already forgot, 22, let's just do 22,678. 22,678 was your entry price. Your take profit, let's say your take profit was 22,732. And then stop loss, let's not worry about that. Okay, let's just calculate it with one contract. You would have made $1,080 from NQ off of one contract going from 22,678 to 22,732. $1,000. 22,678 to like right in here. So this little move would have made you $1,000 off one contract. So play around with it, get familiar with how they move, compare different ones, and honestly, I would do that before you ever even start paper trading, just so your mind is fully adapted to how they work. Okay, so far we've completed step number 1, which is just learning the basics on how they work. The most important part was for me to help you guys just see like, hey, tick sizes are really important. Go play around with that calculator. Again, it's linked in the description box down below. And also, please start with micros. Don't even look at minis. Start with micros because they're a fraction of what you're going to experience with minis. And also, NQ is really volatile. It's another tip I'm going to throw in. I'd avoid NQ. Just get familiar with something that's a little bit less aggressive, maybe like ES. Oil can also be aggressive, but ES and oil I personally like, and I think those are great ones to start with. There are other options, but those are just what I personally like. So step number 2 is pick self-funded or prop firm route. Now, this is step number 2 for a good reason because you really can't move on to picking your broker and understanding all the other things we're going to talk about in step number 3 until you decide which route you want to take. So you have to compare pros versus cons, which we will, self-funded versus prop firm route. And we'll also start to cover a little bit of pros and cons on just what futures are in general. So the cool thing about futures is futures trading is very leveraged, but there is no PDT rule. So where you have PDT rule that applies, you need $25,000 to day trade with options or with regular stocks. And yes, you can do a cash account with options, but it still is kind of a pain. With futures, you could have a $1,000 small account and day trade all day, every day. Now, commissions add up, so be careful. But there is no PDT rule with futures, which is why it's really appealing to beginners who are starting with a small account because you've got way more opportunity and you don't have to worry about PDT rule, which in my opinion is a plus. But you still please need to make sure that you are really understanding them before you ever dive in with throwing real money because you can lose that money very quickly. And let's just go over the rest of the pros versus cons and then we'll dive back into self-funded versus prop firms. So futures in general, the pros would be, again, no PDT rule, which I just said. If I could say that really fast, PDT rule, it's hard. Less variables to trade. So I mentioned this if you're coming from options. Options have Greeks, futures don't. There are no Greeks involved in futures, which is really cool. Very liquid and volatile. So if you're used to trading, let's say stocks, sometimes they could be volatile, sometimes not. Just depends on what news is out. You always have a move available with futures. They're always moving. I just realized I have a typo and I'm not going to change it because then I'd have to re-record this and my baby's sleeping and I only have so much time. So I meant to say you can trade them 23 hours, 6 days a week. So they are usually closed 1 hour during the day around 5 p.m. to 6 p.m. Eastern. 6 days a week, so they're closed on Saturdays. They are open all week, and then into Friday night they close, Saturday closed all day, Sunday night they reopen. So yeah, bear with me there. They are small account friendly, which we'll cover more small account options on step number 3. The negatives though, there can be high margin requirements on something like Thinkorswim, which is what I used to chart with, which is why I don't trade futures on the broker that I'm used to charting and trading other things like options and stocks, there are specific brokers I recommend. They can be very risky with leverage, so we've already covered that. If you don't know what you're doing, you can blow your account very quickly. They are very liquid and move fast, which can be a good thing if you know what you're doing, or a bad thing if you don't. You can lose money very quickly because of this. And they are extra volatile with news. So I highly recommend avoiding any big news drops. You need to make sure you're paying attention to that. Level 3 news, avoid at all costs. Your stops will not work. So now let's go over some small account friendly options. Prop firms, which honestly I'm a big fan of, especially in the beginning once you have a strategy down pat. I think that prop firms are just less risky. You're basically buying risk for a cheaper price. And you can usually get started with as little as like $34. So it's really low barrier to entry. In my opinion, the evals are like advanced paper trading. I'll cover a little bit more detail, just a tiny bit, but I'll do a separate video if you guys want me to on prop firms. I haven't done one of those in a while either. But overall, prop firms, you can get started with a very little amount of money. A common small account for self-funded would be anywhere between $1,000 to $3,000. And then prop firms, one more thing to highlight here is they have a lot of rules, but that creates really disciplined traders in my opinion. So there is a pro to that others see as a con. And one tip, which again I'll cover more in a different video on prop firms, but you can copy trade using prop firms, meaning you can hit one button and let's say you're used to making $400 on a trade and you want to start scaling up, but your psychology always gets in the way because now you're trading more contracts, you're seeing a bigger number. You can do something called copy trading, and you can hit one button and copy that across, let's say, 5 different accounts or 10 different accounts. So if you're used to making $400 per trade, you can scale that to $4,000 per trade or per day. And you can just do that by adding more accounts via prop firms, via copy trading. Again, if you guys want a prop firm video and want an updated one, just let me know and I will make that next for you guys. Okay, if you are completely unaware of what prop firms are, in really just a short sentence, because there's more to it, but if you know what you're doing and you want to try out for something like a prop firm, which is just someone or a company that will fund you your own account, like they'll give you money to trade with if you know what you're doing. So you try out for an eval. If you prove you can trade, aka you pass the evaluation, then you get moved into a funded account where you can actually withdraw the money that you're making. And so there are rules associated, there are more details to it, but prop firms, again, they allow you to get started day trading futures with as little as $34. I personally like Apex Trader Funding, and we do have a code with them. So the code is Peachy. They run sales quite often, so look for an 80% off sale and use the code Peachy to get that. If they don't have a sale going on right now, they do them all the time, just wait. And that's when I'm referring to $34. Really quickly, we can go look at their site. I think they are updating it, but you can see there's an 80% off sale right now. You can scroll down and you can see that if you would like to buy an account, let's see, if we go back, you can see that Rhythmic, we've got $177 for 50K. 177 times 0.2, because it's 80% off, means you'd be paying $35.40. That account used to be $167. I just saw that they changed the price, so I'm glad that I just did the math and somebody didn't come at me in the comments because I was $1.40 off. So I stand corrected. You can get an account for as little as like $36. Big deal. That's lunch nowadays, right? But yeah, Apex Trader Funding is the prop firm that I like. Again, if you guys want more details on that, that's a completely separate video. But once you decide if you want to go prop firm or self-funded, then that's obviously which option you're going to choose. If you're going prop firm route, Apex or whoever you like. If you're going self-funded route though, that means you're actually just going to use your own money to fund your own account. Usually, like I said, it's $1,000 to $3,000. That brings me into the self-funded, aka small account friendly trading brokers. NinjaTrader, Tradeovate. Those are really good self-funded options because they allow you to day trade futures without needing a crap ton of margin. And we can go look at an example, let's say for NinjaTrader, on how much you would need to trade, let's say, one contract of ES. Okay, and this is going to be the exact same for Tradeovate, so we're just going to use NinjaTrader. So you can see right here, there's low margins. So they offer clients aggressive 50-day intraday margins, meaning you're not swing trading. So you're just day trading. 50-day for micro contracts and 500-day for regular. So we can view margins by market. We can go type in ES, And if you want to trade one regular size contract of ES, you need to have at least $500. Now, if you wanted to swing trade, that's much more money, $24,000 almost. But one tip here is if you have, let's say you have an account with like $550 in it, and you try to trade one contract of ES, if that account drops underneath $500 at any point, they have the right to liquidate you. And if they do that enough times, they'll fine you a $50 fee. So just be aware that you don't want to have your balance too close to what you're trying to trade. If you have a $500 account, I would be looking at micros all day long, which would just be $50 margin versus $500. If you have a $1,000 account, then you can day trade one contract, but I still would recommend starting with micros. It's just much safer versus starting with something like a regular ES contract. Step number 3, and the last step to this, is we already kind of dove into that. That was your broker, your strategy, and risk management. So starting with the brokers, we just talked about that. NinjaTrader or Tradeovate, depending on if you're going prop firm route, that's a whole different route altogether, but you'll still have the option to connect a broker like Ninja or Tradeovate. Again, separate video. But choosing if you're going to go self-funded or prop firm route is very important, because you can't really open your trading broker account until you make that decision, because you don't want to be paper trading or practicing on a broker that you're not going to use to actually trade with. So make sure you choose that option before you choose your broker and understand how that all works. But again, if you're just doing self-funded, Ninja or Tradeovate are great options. If you go prop firm route, you can still use Ninja or Tradeovate. But again, just make sure you fully know how that works connection-wise with your prop firm. Now, you need, in my opinion, an advanced charting platform. So I trade using NinjaTrader. That's who I personally use. But I do not chart on NinjaTrader because it's very limited. I like Thinkorswim. Other people use TradingView. But I still would recommend having separate trading software versus separate charting software. Like I would just have 2 different ones. And if you have a laptop like I'm recording on right now, you can just easily split your screen with 2 windows. And that's what I've done for a very long time. You don't need a big screen to do that. But I think having an advanced charting platform like Thinkorswim or TradingView is very important, because a lot of times Ninja and Tradeovate are just very limited and you're not going to have a lot of capabilities, and it's just, in my opinion, worth having a separate platform. And you guys have already seen Thinkorswim because that's what I've been using to show you guys examples throughout this tutorial. So yeah, I'm a big fan of Thinkorswim for charting, and I've been using them for 8 years, so I just can't get away from them. But TradingView, like I said, a lot of people like them as well. All right, next, let's move into really important stuff here. You have got to use a trading plan with proper risk management. I just realized I did another typo. Bear with me. Just bear with me, guys. I meant to say with proper risk management. Prop firms, proper, okay. And a few things, these are just things that I personally do and would like to recommend to new traders, especially when trying futures, is I would stick to 2 to 3 A+ setups per day. Don't allow yourself, with not having the PDT rule, to go crazy, because again, commissions will add up. And I think it's just really easy to get sucked into over trading. So 2 to 3 A+ setups per day is a good thing to shoot for. And you should know what your A+ setups are based on your trading strategy. If you don't, please make sure you know that, because again, if you're just taking B-, C- setups, you're going to have a lot of paper cuts. Your risk versus reward's not going to make sense. And then you add in commissions on top of that, and it's just going to be a mess. So make sure you're looking for A+ setups only. That's across the board with anything. The next thing is you have got to have a stop loss on every single trade you take. I don't care if you're coming from options or stocks and you're not used to trading with stop loss. You have got to use a stop loss with futures. If you don't, you will literally blow an account probably in the same day. So please make sure you have a stop loss on every trade. Get to know your platform very well. I really am a big fan of bracket orders. You've got your stop loss already set when you hit the buy button. So everyone should know how to do that, where when you're entering a trade, your stop loss is automatically attached to that trade, and you should be able to move it like you see on a lot of my trading videos. Max number of trades per day, I think, is another great rule to have. Now, for me personally, I look for 2 to 3 A+ setups per day. You know, max number of trades could look different for you based on your strategy. If you're more of a heavy scalper, I don't know. I want to change this though, because we already said 2 to 3 A+ setups. So let's just say max number of losses per day. Like for example, losing trades. If you lose 3 times that day, call it a day. Try again the next day. I think that's a really important rule to have as well. And you want to track your results. You want to have a journal. You want to track your wins, your losses, your emotions, what you did right, wrong. And this is really important across anything you're trading. But I just want to remind you guys, futures, like I said, are very leveraged. They're very volatile. You can't be coming in here and just throwing darts and hoping it sticks, because you will blow a lot of money. That's why I am a fan of prop firms. And I said a tip down here, if you're going prop firm route, make sure you have a good scalping strategy, which I'll cover in just a minute. But if you're, I'm a fan of prop firms because you're only risking $36, let's say, per prop firm account. Versus if you're throwing $1,000 into a futures account and you don't know what you're doing and you don't have a stop loss, you can cut that account in half very quickly. And the reason I said make sure you have a good scalping strategy if you do go the prop firm route is because a lot of them have trailing thresholds against the risk that you're allowed to have, and that trails. So if you are letting the profits, let's say, go all the way up to 2,500 and then all the way back down, and you let that trade go from green to red, that's going to trail against you. So make sure you know how to scalp. And since I was able to run through this pretty quickly, my baby's still sleeping, we'll actually go back, and again, I'll cover this more if you guys want on a separate prop firm video. But going back to something like Apex Trader, let's say that you do look to buy an account. I hate this little wheel thing. Let's say you look to buy an account from them. You want to look at, like, let's just say a 50K account. That's what you want to try out for. And remember, with an 80% off coupon, remember to use coupon code Peachy. If you don't use the coupon, they will not refund you, so make sure it changes the price. But as you can see down here, $177 a month, remember 80% off, you're paying like $36. But one thing I want to highlight is you see how it says trailing threshold $2,500 right there, and then profit goal of $3,000. All that means is in order to pass your eval, you have to make $3,000 without hitting your trailing threshold of negative $2,500. But trailing threshold means that if your profits are going up, your trailing threshold is also going up. So that's why you have to be good at scalping. You can't just let the trade go all the way up and then crash all the way back down. And one thing I want to end this on is just showing you guys what some people were able to do, and that it is actually possible to start with a small amount of money using something like prop firms, as long as you have a strategy and know what you're doing and actually get results. Another cool thing about Apex is you can trade up to 20 accounts. And so this was one of the guys in our community named Ares, and he was just basically saying how grateful he was he found futures, and especially prop firms, because he copy traded 20 accounts and he made $3,000 that day on average per account, meaning he scaled up to a 60K day. That is more than people's salary in an entire year. And so prop firms done right, once you learn the foundation of your strategy, once you perfect it with one account, again, the really cool thing is you can scale up using multiple different accounts with prop firms or one like Apex, because a lot of the others don't let you add that many accounts. So that can really be a game changer for a lot of traders. But again, do not copy trade accounts until you have proven profitable with one first, and then you can start scaling. Remember, the other cool thing I said is you can trade futures in pre-market. So Jack here was just saying he lives on the West Coast. He gets up early. He can be done early with his day, and he made $1,200 on short scalps with us in oil and pre-market. I love trading in pre-market. And honestly, I've been getting back into the swing of things because my baby finally has a nap schedule, and I'm a big fan of pre-market trading because I love being done with my day early. I always try to post as much free content on YouTube as possible. You guys know that. But if you want more from me, I do have the Peachy Investor community. Make sure to sign up for that Peachy Investor newsletter, because we also post the videos in there when they are released, in case you're not paying attention. Or just hit the notification bell and then you'll be notified when I post next time. And if you guys want a prop firm video from me, just let me know down in the comments and I'll make one. Thank you guys so much for watching as always, and I'll see you next time.